Hi, I'm Ross from Crimsmith Accountants in Hamilton. Today I'm going to talk about a simple trading property. So I did an example last week of a long-term hold and what the numbers work. I'm going to use exactly the same property now, and we're going to see how that looks for a trading property. And sometimes you get that. You get something that won't work as a rental property, but maybe there's a trading property opportunity. So I'm going to bring up what property it is, because most of you will not remember. So hopefully you can see my example. It's a rundown property in Wanganui. I explained last week I try not to be biased. It's the first property I could find with the value and the rent on TradeMe. And I used it as a rental example, and now this is the trading one. So the asking price is $249. It's got the rent and things in there. It's got a few pictures of what the property looks like. You can see things like muddy tracks across, which is obviously not pretty. It's got lots of trees. It's kind of ugly colours. There's, I imagine, a lot of work that needs doing on it long term. So what we're going to do is run through the simple numbers in a simple spreadsheet. So I'll bring up my spreadsheet. So obviously I'll fill in the simple numbers to start with. It's advertised at $249. So we're trying to trade. Really important. Well, one of the easiest ways to make money trading is to buy really well. So maybe we negotiate down and we get them down for $330. That's not amazing. That's just a little discount on what it is, but that's quite an important part. Everything you can get down in that purchase price, it's obviously more money for you. I have a standard information, so I always work on commission on sale. You might want to sell it privately, awesome, but you might not be able to. So work with commission to start with, and if you don't pay commission, it's a cherry on the top. There's always legal fees. There's going to be some sort of accounting. There's likely to be advertising. There could be some sort of rates. Hopefully you're not holding it for 9 months, but there is going to be rates in there. So we'll go a bit more conservative, $1,000. Then we're looking at renovations. How much are we going to spend on this property? And it could be a fortune. It's pretty run down. You're going to spend quite a lot. But let's say $50,000 just for example. You're then going to spend some phone, some travel, and some other things. So our total expenses are $300,000. Normally, if you're a property trader, you're going to be GST registered, and you're going to claim GST back on all those expenses. Really important to get some good advice if you're looking at getting into trading. About when it becomes a taxable activity and therefore subject to GST, and also about zero rating to make sure you can actually get that GST back on the purchase. So really important you get some expert advice about that and you understand those concepts, otherwise you can get caught out. But in a normal case you would claim GST back, so you get about $40,000. Your real cost is $261,000. Long term, if you're a trader, you might start having loan fees. Banks catch on to it's a short term and they're not making so much money, so you might have some sort of loan fee. 9 months is a bit long. Say that you are unlucky and you hold it for 6. And maybe we're running more at 4.5% rather than 5%. I'll check I got that right. So we're running at 6 months. At 4.5%. So that's all our expenses in there. We might be looking at spending the $261 plus some loan fees and plus some interest. It's got no GST. Then we're looking at what you're going to sell it for. And generally, to me, the first sort of figure, the first information is generally the right one. The more you try and manipulate it afterwards, the worse it's going to get. So what you would do in this case is you'd look around at other sales. You would talk to agents and go, look, if I do these things, do it up, what's it going to be worth? And maybe in this case, it's worth $300,000. So what would happen again, if we're GST registered, we have to pay GST on the sale. So we lose $39,000, we're down to $261. What this example shows is if we sell it for $261, less the $257 costs, less the interest and loans, we would actually lose money. There would be no point doing that. So buying at $230, spending $50, sell for $300 is not going to work. So you would need it to be at least $350,000 to sort of start getting worthwhile and start getting a reasonable profit there. And if you, like I said, don't manipulate the figures. Don't start off thinking it's worth 300 and then, maybe we could get a bit more, maybe we get 350. you want your starting figure in there. So in my case, if it was 300,000, I would walk away from that deal. There'd be no point trading it. But in this case, I really have no idea of that property in that market. So that would be something you'd need to look into a lot more and see what's going to get there. So if we carry on with 350, just for example, so 350, pay 45,000 of GST, less with 304,000, less your expenses excluding GST, less your loan and your interest, making about 38,000, which is reasonable, about 10%, and that's sort of what you generally look for as a property trader. You want to make a reasonable profit, and around 10% on the sale price would be reasonable. Obviously, if you can make more, fantastic. But it's about making a reasonable profit for the risk. If you do a lot higher value property, then obviously you want some more profit here because there's a greater risk. If you then pay tax on that profit, I've just used 33% as the highest tax rate. So you'd lose almost 13,000 in tax, be left with about 26,000. If you think about that, if you do 2 or 3 of those a year, it's actually a reasonable living, a reasonable income from doing it. But just be careful. Property trading to me is lots of fun, but it is a really hard game. It's a risky game. So yeah, it's all about setting it up right, getting some good advice. There's some good advice that can, how you can do things that can protect your money a little bit. So yeah, the structuring of right and asset protection is very important for it. And like I said, understanding GST 0 rating is essential, but also understanding tainting and other things is great. Also, if you can move that income to lower tax brackets, so say if you could move that to someone who's got lower income tax at 17.5%, then that's going to reduce your tax bill quite a lot, and also increase the amount that you get in the end. So thinking about little things like that, where's the profit going to flow through, how that's going to be taxed can make a huge difference. So hopefully you've enjoyed this video. If you haven't already, last week, like I said, did a simple rental example on the same property for how that works from a long-term rental point of view. So have a watch at that. And yeah, make sure you've liked our Facebook page, join up to our newsletter list. We put out some great information that helps you as property investors. So I hope you've really enjoyed that. Thank you.